All right, hello everyone. Today we're going to go over understanding a profit and loss statement, also called an income statement. And what a P&L basically is, P&L, profit and loss statement, is basically an accounting report card. So what we're going to learn today, we are going to go over what is a profit and loss statement. And some questions you may have are, where does a P&L come from? It could be, how often do you receive one, and who creates that? The other point that we're going to go over are, what are the components of a profit and loss statement? And some of those are going to be revenue, gross profit, expenses, your operating profit, and even your net income. So we're going to dig more into the components of a profit and loss statement in a little bit. We're also going to go over that a profit and loss statement is a series of events. And this is something that once you get your head around this, it can really start to make sense as far as this report card, this financial statement. And we're also going to go into, how do you use a profit and loss statement as a tool? How do you put that as one of the many tools in your tool belt? So with that, we're going to go right into what is a profit and loss statement. And a definition for what a profit and loss statement is, a profit and loss statement is a financial statement that summarizes the revenues, costs, and expenses incurred during a specific period of time. So said another way, if you were basically putting all the data into your profit and loss statement, you have your sales, and then you want to subtract out any of the expenses that you took within that specific time period, and the difference between your sales and your expenses is called your net income. Now, the objective is to have a positive net income, not a negative. So that is basically a very layman's term summarization of what a profit and loss statement is. So what I wanted to show everybody here is an example of a high level view of a profit and loss statement. So you have your total revenue, that is going to be your sales. So let's say in a specific month, any given month, you have $100,000 in sales. And for those $100,000 of sales, you actually had to sell product. And the cost of that product, also COGS, also called COGS, or cost of goods sold, or if you're in a service business, it could be cost of service. But we're going to focus on cost of goods sold. And let's say that merchandise cost you $55,000. So if you take your $100,000 in gross revenue and you subtract out your cost of goods sold, you're left with a gross profit of $45,000. Now, don't get too excited. That $45,000 is not actual profit, because what you have to do next is, in order to generate that $45,000 in gross profit, you had to incur expenses, and that's for the next line, total operating expenses. So let's say your total operating expenses in a specific month cost $39,000. So what you end up doing is you take that $39,000 of expenses and you subtract it out of your gross profit of $45,000, and you're left with an operating profit of $6,000, EBITDA. And you might be asking what EBITDA is, and EBITDA is earnings before interest, taxes, depreciation, and amortization. So the $6,000 of operating profit is not still your final profit. So you need to still go over any other income or expenses that you incur during that month. So let's say you sold a computer and that was $500. That goes under other income. But you also incurred another expense somewhere else during the month. That was $100. So you got to take that back out. Let's say you had a construction loan, and you had some interest on that loan. So $600 worth of interest you have to subtract out. And you also have depreciation, because Uncle Sam wants you to depreciate everything over a period of time. And let's say that depreciation is $1,000. So the true profit, the net income, what you are left with in a specific month is $4,800, which is not bad. It's a profit, it's a gain, much better than a loss. So this is high level. When we start going into the next section, what you're going to be looking at is the framework of a profit and loss statement. So what we just went over was a high level look of your profit and loss statement. And we had categories such as revenue, cost of goods sold, expenses, and your net income. So what you want to do is you want to keep in mind that that's the high level look. In your business, you're going to have your expenses broken out much more granular. You're going to have, as an example, you're going to have your rent broken out under expenses, your utilities, phone, car, credit processing, payroll processing. It goes on and on. So you definitely want to break down your expenses very detailed. And the more granular you can break them down, the better the optics are going to be. And what I mean by that is you want good information going in, accurate information going into your P&L so that it produces accurate results. So the better the data going in, the more granular you can make it, the better you're going to be able to get better results, better detailed reporting. And you're going to be able to influence those numbers more so, be able to manage those numbers and ultimately affect positive change in your business because you've got a higher quality of optics coming out. So continuing on with the framework of a profit and loss statement, there's a couple of terms that you may hear, and I wanted to put them in this because the last thing I want you to do is be in a conversation with somebody and they start throwing out some terms and it goes right over your head. So you may hear people refer to SG&A or G&A, and what that basically stands for is two things: sales, general, and administration, or just general and administration. And what that has to deal with is it's a collection of the expenses in those specific areas. Another thing that you may hear is top of the line or top line, and that refers to the top line of your P&L, also your revenue, and then you also may hear what's the bottom line, and that has to deal with what is your net profit, your net income. So I kind of talked about this one when we were going into the optics, and what you want to pay attention to is garbage in, garbage out. What I mean by that is you don't want poor accounting practices to basically give you generalized numbers, generalized data. You want to make sure that you have the most accurate reporting going in so that when you do close out your month and you do generate a profit and loss statement, you have the most accurate data. So this way you can actually manage your business at a much higher level. So a profit and loss statement is a series of events. And what I want you to start thinking about when you look at a profit and loss statement is I want you to think of it like a soap opera. And a soap opera, there is no end. It's just a storyline that keeps moving. When you have something like, when you look at March, what happens in March is going to affect April. What happens in April is going to affect May, so forth and so on. So when you think about a profit and loss statement, it's really going to be a presentation of the past. It gathers all the information that took place in the past, in history, and it's showing you what the results were. So you have to keep in mind when you're looking at a profit and loss statement, you're literally looking at historical data. So when you're looking at historical data, you want to be able to figure out how those results came to be. And especially when you might have a month where it shows that you had a loss, you want to be able to reverse engineer how those results came to be. So you first want to obviously identify the results on your P&L statement. And when you think about it, well, how do those results come to be? And those results are basically a result of an action. So activities produce those results. And then if you go back further, well, how do those activities come to be? And they came from decision. So an activity comes from a decision. And if you go one more step further back, well, who makes those decisions? And those decisions are going to be management. So if you really want to break down the process of the results, how those results end up on your P&L, is you want to look at this simple process. Management makes decisions. Those decisions get turned into activities, and those activities produce results. So if you don't like the results that you're seeing on your profit and loss statement, you have to go back and pay attention to who the management is making those decisions. And that might be you. You might be making certain decisions that are turning into activities that you don't like the results, and that's okay. As long as you identify that, you can fix it and move on. So how to use a profit and loss statement as a tool. And this is one of the biggest things, because we can sit here all day long and talk about your P&L, but unless you can really utilize it as a tool, you're missing the point. So the thing that I want to go over first is you need it consistent. And what I mean by that is by the 12th of every month, the following month, is when you want to communicate that to your accountant or your bookkeeper, whoever is generating these P&Ls for you. You need to tell them, I need it by the 12th of the month. Too many business owners get it sporadically. They might get it on the 5th one month, and then the 25th another month, and then they skip a month. You need consistency. It is imperative for you to be able to use this as an effective tool. And then you need to be able to trust your numbers. So in order for you to trust your numbers, you need accurate reporting. Goes right back to garbage in, garbage out. You don't want that. You need the highest caliber, highest quality numbers going in so that you get the best data coming out. What I recommend is no personal expenses being run through your business. And I know a lot of small business owners do this for tax reasons. I understand why. But when you do that, you tend to get messy results, clouded results. I recommend not running personal expenses through your business, but if you're going to, I recommend having a completely separate P&L or a completely separate set of books. This one set of books is going to be for tax purposes, where you can run personal expenses through, and another one is going to be for high quality optics, which is going to allow you to manage your business better. And you need to get honest. This is a tool. It's going to produce results, but you need to get honest with those results. Are you the manager making decisions that are producing negative results? The only way you're going to be able to address that is you need to get honest with yourself. And you have to focus on the activities. So focus on the activities that produce the results, and then just keep tweaking that model until it is exactly where you want it to be. So analyzing every line item on your P&L. And what I see too often, business owners will get their P&L, they'll get it sporadically. They don't know how to interpret the numbers. They are intimidated by it. So they kind of skim right over it and they go straight to the bottom line. They see, did I make money or lose money? And while that's an important number to look at, you really need to analyze every line item on your P&L. You need to go through it with a fine-tooth comb. You need to look for any increases in expenses, any decreases in gross profit, basically anything that's going to hurt your net income. You need to be able to analyze that. So you want to look at trends. So when I say trends, you want to be able to not just look at the current month that you just finished. You want to be able to do a 6 to 12 month rolling trend. And you want to look and compare every P&L, every monthly P&L side by side to see, is my expenses going up in a certain category? Are they coming down? Are the results from my adjustment in my activities, is it working the way I want or not? The only way you're really going to be able to spot that is by looking at the trend. The other thing is when you look at 1 month, side by side, multiple months, numbers get put into, they become relative. You might look at an expense in 1 month and it could be a $50,000 expense, but unless you look at previous months, that $50,000 could be a good thing or a bad thing. So you need that relation between a series of months. And that's why focusing on the trend is extremely important. You can use the P&L as a coaching opportunity. So first and foremost, you want to look at it as a tool for you and be able to adjust the activities, the decisions that you're making, how you're approaching your business. So first and foremost, it's a coaching opportunity for you. Second, if you do discuss your financials with your team, and I do have some mixed feelings about this, I've seen this both ways, but if you do discuss the financials with your team, it gives you an opportunity to review this with your employees, with your management, and you can focus on which activities produce which results. So going back to me having mixed feelings on this, I've just learned over the years, if you're going to get very open with the financial reporting of your company with your employees, it is best you're gonna have to take time and educate your team, because if they don't understand accounting as well as they need to, they're going to start looking at certain numbers and think that all that profit is going to you without understanding other accounting report cards and the bigger picture. So I know in my business over the years, I've basically kind of kind of refined it a little bit, and I give more of an abbreviated profit and loss statements to my management team. We go over the numbers, but it's more selective on how I do that. So I've seen this both ways. Some businesses do very well with this, and I'm definitely not discouraging it, but you have to make the decision what's best for your business. But either way, it's a great coaching opportunity. So what we've learned as far as recapping the profit and loss statement is it's a report that summarizes your business revenues, costs, and expenses incurred during a specific period of time. So that specific period of time, you're always going to get one monthly. I encourage quarterly and definitely annually. We've also learned that a profit and loss statement is a series of events. So think of it again as a soap opera, and the events that it's producing are in the past. It's historical data. We are also able to reverse engineer the process of those results that you see on your P&L. So once we can reverse that process, now you know what you have to do in order to change your activities to get better results. We also learned that a profit and loss statement is a powerful tool as long as you understand how to use it. So today's lesson was a little shorter than previous ones, but very, very powerful in itself. So please please check back, and we will have more lessons to come.